Welcome. Thank you for joining me. Today I have David Krebs. He's a licensed mortgage broker here in South Florida, born and raised, and he does residential mortgages in Florida, and he does commercial mortgages throughout the United States. David, thank you for joining us.
Yes, thank you, Bianca. I appreciate you having me today.
Tell us a little bit about what you do.
So essentially, what a mortgage broker does is has a little bit more, I'll use the word flexibility and freedom. And what I mean by that is when you go to a traditional bank or a lender, they typically only offer the products that they carry. Whereas I have relationships with that lender and maybe a dozen or more so on top of that. So I can get pretty creative in offering a specific type product that you're looking for that specific product, and also to exactly to meet your specific needs, whether it be payment or structure type.
Okay. So you're talking about, somebody who doesn't have a W-2 or maybe a foreign national.
So I do all types of lending, from your traditional type lending to your non-traditional type lending. So individuals who maybe have switched from a W-2 to a 1099, okay. That really limits your ability to buy or to refinance, because you've essentially started the clock over, right? So when you end a W-2 type pay structure and you start to a 1099 type pay structure, you're essentially starting the clock all over again.
Yeah.
So whatever income that you had in W-2, that it doesn't count. Some individuals may not show a lot of income because they have excessive write-offs. It's their first year of that specific job, so that'd be also detrimental because your adjusted gross income is not very high. So there are alternative programs that are out there, and foreign national deals are a little bit more tricky. There's non-traditional credit. So essentially you have to build a package, I think would probably be the proper way to say it, to make it make sense, to conform to US rules. So those are a little bit more tedious, I think would be a good word to use. And I enjoy doing those because I get to think, I get to learn about the client, I get to learn what they do in their respective country, what their plans on here, and typically I make friends with all of my clients. So if I do good by them, I pretty much know that maybe the next holiday they come around, they might have a friend that comes to visit them, and then I might get a phone call and say, hey David, I want to buy a property in that specific area as well. You helped my friends, I want you to help me. So it's a win-win situation.
Yeah. You transitioned from working at a bank and then became a mortgage broker. You've been doing this for over 15 years. What is it about this that you love?
I think helping people is something that I enjoy. Just at the end, to see a smile and a thank you really goes a long way. And I was able to help somebody in a very stressful situation. Buying a house or refinancing a house is not the same transaction as going and buying a car. So the stress level is very different. It's much more tedious as far as the documentation is concerned, and there's a lot more questions. Yeah. So being a strategic partner and making sure that everything goes smoothly is fun and enjoyable.
Yeah, and it is very stressful, as you said. It's their biggest asset probably that they own. So it's helpful to have somebody holding your hand and letting you know what to expect during the whole process.
Yes, yeah, it's good to, I try to make myself very accessible. I try to respond in a very timely fashion, and I try to answer all questions. If I'm not able to, then I'll definitely steer you in the right direction and make sure that you have the answers that you need in order to proceed, or make the right decision in order to proceed. Every day is different, every client is different, and every deal is different. And I think that's what makes my job fun and unique. And so, one day I'll be talking to a self-employed borrower in regards to, I don't show a lot of tax income on my returns, so how can I buy this house? On the flip side is I have an individual who maybe has a gift from mom and dad and they want to use it and spend it on a property. So every day is different, and I think that's what makes it kind of fun and exciting. And there's a lot of different programs and products.
Yeah. So interest rates are at historic lows. And if someone is looking for a non-traditional loan, what kind of interest rate can they expect compared to a mortgage from a traditional bank, let's say your Bank of America or your Wells Fargo?
Sure. So I actually saw a loan estimate yesterday from Chase Bank. And that was a referral from a friend of mine who lives across the street, an attorney by trade. And so the client had called me and says, a little frantic, and says, David, this doesn't seem right. They're playing the numbers game. So they sent me the initial document that they gave, plus the new document, which was about a 2-week time frame difference between the two. And I had to explain that, interest rates change, just like, you go to the gas station and get gas. So every day it's not the same price. And I don't really see anything that's really out of line. Could you do a little better? Maybe. Could it be worse? Yes. So is this a bad, package that they put together? No, I don't think so. So I think just giving those little tidbits kind of ease the situation. I didn't get the deal. I wasn't gonna, pull the deal from the bank. It took 15 minutes and answered a few simple questions, and that stress level came down a little bit in order to proceed. So, people have to understand that these are moving numbers. If you change your closing date, your numbers are going to change.
Okay.
If you change your insurance company, your numbers are going to change, and that's just part and parcel of the game.
And very good to know, because like you said, the stress level is very high, and people don't, this is
Yes.
not something you do every day. So when anything changes, it's like starting over almost emotionally. So regarding different loan types available, because that's really what you specialize in, for a family, let's say family wanting to buy a single family home that don't have the 20% to traditional 20% to put down, what do you recommend?
There's several government programs that are out there that you can essentially borrow up to 97% on the conventional side. There's some creative products that you can go as high as 90% on the non-conventional side. So
Okay.
there are some additional options that are out there that are outside of maybe your traditional bank parameters.
Yeah.
But it's knowing what who has the appetite, I think is probably a good word to use. Who has the appetite for the additional risk, the additional exposure, and that's essentially where I come in. Is I have my finger on the pulse. I know who's lending, who's not lending, who has an appetite for condos, who doesn't have an appetite for condos, who only wants individuals with XYZ type profile. So that's important for me to constantly be on the phone, asking the right questions, building rapport and relationships with lenders and such, so that way I know what they're looking for and send them what they want, so that way I can get the deal closed as quickly and as efficiently as possible.
Yeah, and when you talk about risk, you're talking about a higher percentage.
Correct. Yeah, the higher leverage on the deal is higher risk, because there's less skin in the game, as you can call it.
Yeah.
So when you're not putting your traditional 20% down, then of course it changes the game plan a little bit.
And the interest rate goes up depending
Interest
on.
rate goes up, there's mortgage insurance and things of that nature.
Yeah. Okay, so what can someone expect, for example, if their credit score is not ideal? Let's say 500 to 600.
First, I would take a step back and ask them how. Somebody with a 500 score definitely has items that need some attention.
Yeah.
So if they don't want to address those items, then we can proceed. There's not a ton of options that are out there, but nonetheless, there are a limited amount of options for that type of a credit profile.
Yeah. And what has changed in the underwriting process due to the COVID-19 pandemic? What are you seeing?
Most institutions, not just in lending, but across the board, are essentially working from home. So you have some that, like to watch Oprah in the morning before they start work. Some, get into it and start working. So I think it's disrupted the workplace a little bit. A few have been able to embrace technology and to utilize the different steps to move from A to B to C. So those are the ones I think are right now stealing the market share, whereas others have very lengthy turn times. And when you're in a tight crunch, it makes it almost impossible to meet those deadlines that have been requested. So I think, to answer your question, a lot of underwriting essentially has become a little tighter in a sense, because I think people just don't know who's working, who's not working, who's employed, who's furloughed, who's not furloughed. So when you take all those items into consideration, it makes it a little bit more challenging.
Yeah.
That, and plus, all of these institutions learned from the last cycle, in my opinion, and so essentially now they're being a little bit more proactive rather than reactive. The last cycle, they said, hey, you have to default in order to receive some sort of assistance. Now they're being proactive, trying to soften the amount of influx of individuals, and they're offering some sort of a moratorium or a forbearance type package. I don't think a lot of people have read the fine print and what the ramifications can be. So I'm a little, kind of keeping my eye open to see what happens potentially at the end of this month, when the governor kind of lifts the moratorium and such, for tenants who are not paying rent and individuals who haven't paid their mortgage and such.
So for moratoriums and forbearance type situations, you recommend that they go back and really read what they signed up for.
Read what they signed up for. And so, as an example, if you took 2 to 3 months, no payments, right, for that time frame, and if you have allocated those funds somewhere else, you potentially might have a rude awakening. And if it shows up as a mortgage late on your credit report, that could be pretty detrimental. And the reason being is, your mortgage typically is your largest trade line on your credit report. And so to have a scratch really has a pretty large effect. That, and plus, if you to refinance and take advantage, let's say you're at a 4% rate, and you know that your lender sent you a teaser and said, hey, we can get you a 2% rate, you may not qualify.
Yeah.
Because you're outside the underwriting guidelines. So it's a multiple effect.
Yeah. Okay, and can you give us an example of a success story that you've had, and maybe of a deal that fell through and why it fell through?
Deals that I've been referred to that essentially were not within the bank's appetite. Could be for credit items, as far as credit scores not being within their wheelhouse, to maybe the documentation was not as clean, meaning that 2 years of income was a little topsy-turvy. So about a month ago, I had a client who called me who had a single-family house that was listed for sale, and the buyer's agent had a client who essentially was self-employed, and his income was not straightforward. He had sold a company, and the way that it was structured, the way that the attorneys had structured, is he was going to get a payout down the line, and he had some initial income on a monthly basis to document. But it was not sufficient enough to meet the bank's guidelines. I was able to have a discussion with him, get some of his documentation, and actually find a lender who was willing to take on that type of a profile. So I think it's pretty important to A, ask the right questions, B, understand what the client is looking for specifically. So narrow down exactly what you're looking for. If they're not sure, then it makes it difficult for me to be able to find what they're looking for. And then C is make sure that I have a pretty robust loan package, so that way I make sure that I see, maybe Section A is going to get beat up a little bit more, so maybe I have to incorporate some additional items in Section B to offset that risk that's in Section A. So I think there's an art to structuring a deal to help overcome some obstacles that an underwriter or a lender might see, because essentially multiple eyeballs are going to go on that file. So you want to make sure that you put it together correctly the first time, because nobody likes to have egg on their face, right? So I try to make it a clean landing every time. But of course, there's always some obstacles that maybe the borrower doesn't tell you, or there's some items on title. So some things that are just outside of my control. But I always try to do my best.
Yeah. And what about a great success story that sticks in your mind?
I recently had a mother-daughter in a refinance where they were in a forbearance situation, and the daughter a few years ago had filed bankruptcy. So typically you need at least 2 years of a time frame from the date of discharge to be able to refinance. I found a lender who was willing to do it in less than that 2-year time frame, and give them some additional cash, some capital that they needed to pay off some debts and get them out of that mortgage note that they were currently in. So the thank you that I received from both the mother and the daughter, it was nice. It was nice because you could tell, they were pulling their hair out, and they both called me on the phone and thanked me, and it was nice. It's nice to know that I helped them. I made the referral partner, the attorney who reached out to me, it was their client, called me and said, hey, thanks for making me look good, so it's those types of situations that are kind of cool and enjoyable.
Yeah, that's wonderful that you were able to refinance them. I'm sure that, had a great impact on their life as well.
Yeah, correct.
Well, great. Thank you so much for sharing some stories with us, some information that's, very valuable to somebody looking for a loan that may not fit, those requirements of a traditional loan. And where can we find you?
So my website is pretty simple. It's just my name, davidakrebs.com. And I'm here. So if you have any questions, happy to help.
davidakrebs.com. Thank you very much.
Thank you.